The energy industry is a big part of the economy and one that had been a major job creator. But the tide is turning, and now more than a few of those jobs are vanishing. A prolonged slump in the price of crude is forcing companies to lay off workers. Today, West Texas crude fell to $48.52 a barrel. It is down nearly 20% over just the past month. And as some of the world's biggest energy companies report earnings, many aren't optimistic that prices will rebound anytime soon. Jackie DeAngelis takes a closer look at the caution signs popping up in the energy industry.
A big week for energy. The market's dealing not only with volatility in crude prices, but a slew of earnings to consider as well. ConocoPhillips, the largest independent oil and gas company in the U.S., out with results this morning. On its face, a beat on earnings, but estimates that have been dramatically reduced in an environment of low oil prices. Reading between the lines, the outlook is hazy. The company telling investors it will cut capital spending this year by $500 million, and CEO Ryan Lance saying the company is preparing for lower, more volatile prices.
I think the energy companies are front-running themselves with bad news right now. We have a lot of bear sentiment in the market with China, with what might be coming forward with Iran. So why not have it in the market now? So down the road, if it does happen, maybe it won't be as bad.
And it's not just Conoco forecasting headwinds. Just this week, more job cuts to reduce costs. The layoffs, which initially focused on blue-collar workers, now widening to engineers and scientists. 1,500 more jobs at Chevron to save another $1 billion, and 6,500 jobs slashed at Royal Dutch Shell after its profit fell sharply on lower oil and gas prices. To add insult to injury, oil servicers Halliburton and Baker Hughes reiterating cautious outlooks for the second half of the year. Tomorrow we'll get reports from two bellwether energy companies, Chevron and ExxonMobil. How far do they think oil prices may slide? How will they guide the market? And what are they doing to weather the storm?
It looks like we could go up a little bit, but when you look at the long-term charts, it looks very much like it did in December, and it looks like we could head to the downside once again.
Where oil goes from here is anyone's guess. Oversupply, the potential for Iranian product to flood the market, and dollar strength remain as downside pressures. But slight declines in U.S. production and Saudi Arabia's plan to make slight production cuts after the summer could be the start of what could tip the scale the other way. For Nightly Business Report, I'm Jackie DeAngelis.